All right, so you've been digging into MongoDB,
Yeah.
ticker symbol MDB,
Hmm.
and basically trying to figure out, like, is this a good time to invest in them?
Right.
You know, is this a good company to invest in?
Yeah.
And you've shared some really interesting information with me, a mix of, like, their financial reports and some industry analysis as well.
Exactly.
So what we're going to do in this deep dive is, like, pull out those crucial insights
Okay.
so you can get a clearer picture of what's going on with them
That's good.
without getting, like, totally overwhelmed by all the numbers and stuff.
Yeah, absolutely.
We've got their latest quarterly results and the full year results for fiscal year 2024.
Hmm.
We've also got some information on their business model, like how do they actually make money?
Okay.
Who are they up against in the database world?
Yeah.
What's that landscape looking like? And then
Right.
kind of a sneak peek into what they're planning for the future,
Gotcha.
especially around AI.
Interesting.
Now, here's where it gets really interesting. Because the numbers show they're bringing in more and more money,
Hmm.
but the reports also mention some losses.
I see.
So we really need to figure out, like, why is that happening?
Yeah.
Is this like a red flag?
Right.
Or is this just like normal growing pains for a company?
Yeah.
And then we're going to look at, with all these other database options out there, like Oracle and all those,
Yeah.
how is MongoDB holding its own?
Mm.
Do they actually have an advantage?
Right.
Or are they kind of, falling behind?
Yeah. Great question.
So let's just dive straight into their financial performance.
Okay.
Let's start with the good stuff.
All right.
Revenue's definitely going up.
Good.
In Q4 of fiscal year 2024, they hit $457.5 million in revenue,
Wow.
which is a 26.6% jump from the year before.
That's impressive.
And this is according to Yahoo Finance and NASDAQ.
Okay. Solid sources.
Yeah, and for the whole year, it was even better.
Oh, wow.
They brought in $1.68 billion.
Okay.
That's a 31% increase year over year.
Yeah.
PR Newswire reported that.
Yeah, it's all that.
And the biggest driver of this is their subscription revenue,
Oh, interesting.
which made up over 97% of their revenue in the llast quarter.
So almost all of it.
Yeah, and PitchGrade pointed out that, this whole subscription model
Yeah.
is really about building that reliable income stream.
Mm-hmm.
You get people paying you every single month.
Right. Predictable revenue.
Exactly, and it helps build strong customer relationships
Yeah. Makes sense.
because they're kind of locked in.
Yeah, they're invested.
So from that standpoint, things look pretty good.
It does seem promising.
But now let's talk about the
losses.
the losses.
Yeah.
In Q4 of 2024, they lost $55.5 million,
Okay.
or 77 cents per share. And for the whole year, the net loss was $176.6 million,
Right.
or $2.48 per share.
Yeah. That's not insignificant.
No, it's not. And this is all from PR Newswire.
Okay.
So that's a lot of red ink,
Yeah, it is a sizable amount,
Yeah.
but it is important to consider the context here.
Okay.
Both of those losses were smaller than the previous year.
Oh, really?
Yeah, so last year, their net loss for the full year was $345.4 million.
Wow.
So they're definitely moving in the right direction.
So even though they're still losing money,
Yeah,
they're losing less money.
exactly. It seems like their revenue growth is catching up with their expenses.
Okay, so that's a good sign.
It's definitely something to watch.
Now, here's another interesting thing.
Okay.
When you look at their numbers on a non-GAAP basis,
Non-GAAP.
yeah, which sometimes excludes certain costs,
Right.
they're actually making a profit.
Oh, wow.
Yeah, so for Q4 of 2024,
Mm-hmm.
their non-GAAP net income was $71.1 million,
Okay.
or 86 cents per share. And that's way up from the previous year.
That's a big jump.
Yeah, and for the whole year,
Yeah.
their non-GAAP net income was $274.2 million,
Oh.
or $3.33 per share.
So that's a huge difference between the GAAP and the non-GAAP numbers.
Right, and it kind of makes you wonder, like, which one is the real picture?
Yeah, which one should we be paying attention to?
Exactly, because non-GAAP often excludes things like stock-based compensation
Right.
and one-time charges.
And for a tech company like MongoDB,
Yeah,
stock-based compensation can be a big expense.
because they're trying to attract all that top talent.
Exactly. They're competing with Google and Amazon and everybody else.
So it's kind of a tricky situation,
It is. It's a bit of a balancing act.
Because on the one hand, you've got the GAAP numbers, which
Uh-huh.
show the whole picture.
All the cost, everything.
Exactly, and those are showing a loss.
Right.
But then you've got the non-GAAP numbers,
Yeah.
which kind of show how their core business is doing.
The underlying profitability.
Right, and those are looking really good.
So which one should an investor focus on?
That's the million-dollar question.
It really is.
GAAP gives you that standardized view, you know?
Yeah. Follows all the rules.
Exactly. Everything's accounted for.
But non-GAAP can sometimes give you a clearer picture.
Yeah, like of the day-to-day operations.
Exactly. Are they actually making money from what they're doing?
Right. So it's really up to you to decide which one you trust more.
And to understand what's being excluded and why.
Exactly. You got to do your homework.
Yeah. Research is key.
Okay, so let's move on to their business model.
Right.
How do they actually make money?
Yeah. How does it all work?
Well, PitchGrade highlighted that their main focus is subscriptions.
Subscriptions.
Yeah, particularly through their cloud service, MongoDB Atlas.
Okay, so they're all in on the cloud.
Pretty much, yeah.
Interesting.
And this is really important because it means recurring revenue.
Yeah, people are paying every month.
Exactly. So it's a more predictable income stream.
And ideally, it means you've got customers who are going to stick around.
Right, because they're already integrated with your platform.
It's harder to switch once you're all set up.
Exactly. And MongoDB is really pushing this idea of being developer-friendly.
Okay, so they're making it easy for developers to use.
Yeah, and they offer this flexible document database.
Which is different from the traditional relational databases.
Right. And this seems to be a big hit with organizations that need to be able to scale quickly.
Yeah, because things change so fast these days.
Exactly. So what do you think about this approach?
I think it's a smart move.
Yeah.
Developers are the ones who are often making the decisions about what technology to use.
So if you can win them over.
You've pretty much won over the whole company.
Exactly. And this whole document database model,
Yeah.
it's more flexible than the traditional relational databases.
Right, you can handle all sorts of data.
Exactly. So you don't need to like predefine everything in advance.
So it's more adaptable to changing needs.
Right. And that's really important for companies that are constantly growing and evolving.
Yeah, absolutely. But the question is it a sustainable advantage?
Right, because other companies can copy this approach.
Exactly. They're not the only ones who can be developer-friendly.
So it really comes down to whether they can keep innovating.
And stay ahead of the curve.
Exactly.
All right, so let's talk competition.
Yeah, because the database world is a tough place to be.
It's crowded.
You've got big players like Amazon,
Yeah, with their DynamoDB.
which is super popular with companies that are already using AWS.
Right, it's all integrated.
And then you've got Redis,
Yeah, which is known for its speed.
especially for things like caching.
And real-time data processing.
So it's kind of a different use case than MongoDB.
Yeah, Redis is more specialized.
But despite all this competition, MongoDB still has a pretty big chunk of the NoSQL database market.
Really?
Yeah, 6 Sense data shows they have about 45.68%.
That's a sizable portion.
So they're definitely doing something right.
It's impressive considering who they're up against.
So what do you think is driving that?
Well, I think it's a few things.
Okay.
First of all, they were early adopters of the document database model.
So they were kind of pioneers in that area.
Yeah, they got a head start.
Okay.
And their focus on developers has really paid off.
They've built a strong community.
Exactly. And there are tons of resources available to help people learn MongoDB.
And then their cloud service, Atlas,
Yeah.
makes it really easy for companies to get started.
You don't need to manage your own servers.
Exactly, and they just keep adding new features.
So they're constantly evolving.
So it's a pretty compelling package.
It seems like they've found a winning formula.
Now let's talk about the future.
Okay.
Because this is where things get really interesting with AI.
AI.
Yeah, MongoDB is clearly making a big bet on AI.
In what way?
Well, they launched this MongoDB AI applications program.
What's that?
It's called MAAP.
MAE.
Yeah, and it's specifically designed to help companies build AI-powered applications.
Oh, wow. So they're really embracing AI.
And this is according to TBR and MongoDB's own investor relations site.
Okay, so it's straight from the source.
Yeah, and they also released MongoDB 8.0 back in October 2024.
Okay.
And this new version has some really impressive performance improvements.
Like what?
Well, they're claiming a 36% faster read speed.
That's significant.
Yeah, and a 59% higher throughput for updates.
That's huge, especially for AI applications.
Exactly, because those applications are really data intensive.
They need to be able to process a lot of information quickly.
So these performance improvements could be a game changer.
They could be.
They're showing that they're not just talking about AI.
They're actually doing something about it.
Yeah, they're investing in the technology to make it happen.
And that could attract a whole new wave of customers.
Right. Companies that are looking for a database that can handle their AI workloads.
Exactly. It's a smart move to position themselves as a leader in this space.
So how do you see this focus on AI impacting their growth?
I think it could be a huge driver of growth.
Yeah.
For a few reasons.
Okay.
First of all, it opens up all these new use cases.
Right. New applications for their database.
Exactly. Things they never even thought of before.
And it attracts a whole new type of customer.
Companies that are on the cutting edge of AI.
Yeah. Companies that are pushing the boundaries.
And by offering programs like MAAP, they're not just selling a database.
They're becoming a partner.
Exactly. They're helping their customers succeed with AI.
And that builds stronger relationships.
And that can lead to more business down the line.
Right. So it's a win-win.
Exactly.
Now, let's not forget about the risks.
Right, every investment has risks.
One of the big ones is market volatility.
Yeah, their stock price can go up and down.
And that's true for any publicly traded company.
Especially growth stocks,
Yeah, they tend to be more volatile.
because there's more uncertainty about the future.
And then there's the competition.
Yeah, Amazon and Redis are not going away.
They're both formidable opponents.
They each have their strengths.
So MongoDB needs to keep innovating.
Yeah, they can't afford to stand still.
And they need to differentiate themselves.
Yeah, what makes them unique.
And then there's the fact that they're still losing money.
Right, even though those losses are shrinking.
It's a good sign, but it's still something to watch.
It means they're still investing heavily in growth.
And that can take time to pay off.
So it's a balancing act between growth and profitability.
So these are all things you need to weigh when you're making your decision.
Yeah, it's not a simple decision.
There's a lot to consider.
You got to look at the whole picture.
All right, so to sum it all up,
Okay.
we've seen some really impressive revenue growth.
Yeah, they're definitely growing quickly,
They've got a solid business model built on subscriptions.
which provides recurring revenue
They're a leader in the NoSQL market.
with a significant market share,
And they're making some exciting moves in the AI space.
with both software and programs to support it.
But on the flip side,
Mm-hmm.
they're still operating at a loss.
Right.
They face stiff competition.
From some really big players.
And their stock price can be volatile.
So there's definitely some risk involved.
No, the big question is,
Yeah.
how do you weigh all of that?
The potential rewards versus the potential risks.
Exactly what's your risk tolerance?
It's a personal decision.
This deep dive has hopefully given you a good starting point.
A foundation to build on.
But there's always more research you can do.
Due diligence is crucial.
Maybe look into the specifics of their technology,
Yeah, how does it actually work?
their customer acquisition costs,
How much does it cost them to get a new customer?
and the long-term profitability of their AI ventures.
Can they actually make money from AI?
These are all important questions to ask.
And answering them will give you a more complete picture.
And as you continue your research, here's a final thought to consider.
Okay, I'm listening.
In a world that's becoming more and more data-driven,
Yeah,
and where companies need flexible and scalable solutions,
right.
is MongoDB uniquely positioned to capitalize on those trends?
Despite the challenges they face.
Exactly. It's something to think about.
Food for thought.
Thanks for joining me on this deep dive,
It's been a pleasure.
and we'll see you next time.
See you later.